So, people quite often ask, what is a product transfer and how long does it take? So, a product transfer is essentially when you keep the mortgage that you have with the lender that you're currently with. However, you switch to another product. This could be for a range of reasons. One of the main reasons someone might do a product transfer is because initially, when they got the mortgage, maybe they had some credit issues or something that's happened that prevented them from getting the top tier product. Quite a lot of lenders have different tiers for different profiles. So you may have initially been on one of the lower tiers, meaning that you didn't qualify for the best offering from that lender. But 2, 3, 5 years in, you've done everything right. You've paid your mortgage on time. You've paid down any outstanding debts. You now have a fixed term, permanent job. You've become more of a vanilla client. So you don't need any specialist type of products or services with that lender. So you could transfer to another product, but with the same lender. This is quite often a lot easier because the lender already knows you, they have your details, they have the property value. This is why a product transfer is a lot quicker than doing a remortgage or doing an initial mortgage. This can take 1 to 2 weeks. But as with everything, it's always going to be dependent on your responsiveness. Quite often, a lot of the delays that people experience when getting a mortgage are down to them. I've had clients that have called me after being referred by an accountant. And by the way, I get a lot of referrals from accountants. If you're an accountant, make sure that you shout me out. But I get a lot of referrals from accountants, and quite often it's because that person is struggling to get a mortgage for whatever reason. I've had clients call me and say, listen, my accountant, John, referred me over to you. We heard that you're great. I'm desperate. I need to get a mortgage. I found a property. They're willing to sell to me, and I now need an agreement in principle. I'm the type of person that always says this to my clients: be aware that I work really fast. I work really fast. So I'll never rush my clients. I'll never rush them to move faster than they are capable of moving. But my philosophy and the philosophy at our firm is it's okay for the client to wait on us. It's okay for us to wait on the client, but the client should never be waiting on us. So that person comes to me. I say, all right, here's the checklist. I need 3 months pay slips, 3 months bank statement, proof of identification, a printout of your credit report from checkmyfile.com, ID, proof of deposit if it's a first time purchase, etc. I'll send that all over within 15 minutes of having the initial phone call. And then it's tick, 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 tick. I've had clients just disappear for 2 or 3 weeks, and that's what's delayed the deal. So that's just a cautionary tale. When you're speaking to a broker, I would like to think that everyone tries to move quickly. Not everyone might be as fast as me, but I'd like to think that we all move quickly and we're all trying to get the best results for our clients, especially when they're in a situation when they need things done quickly. But if you don't send us the documents that we need, we can't do the things that we need to do. So that is a product transfer. The top questions that I get asked before or during a mortgage. The top questions are, what is the best rate? The rate question gets asked all the time. People often ask, what is the best rate? And it's really difficult to answer. And sometimes people might think the broker's being evasive, but the bottom line is, what's the best rate for you? So there may be an amazing headline rate out there. However, you don't qualify for it. The best rates are reserved for the best clients. And if you go directly to a lender, this is why you should always go to a broker. If you go directly to a lender, they may be offering you their best rate. So that might be the very best rate, very best product they have. But it doesn't necessarily mean it's the best rate, because you might find that other lenders, because mortgages are very competitive, you might find that another lender has a better rate. This is why, as a mortgage broker, I will always say, well, what are your circumstances? I'll understand the needs and maybe some of the limitations of the client. We will then go through the criteria that you meet. We'll go through your pay slips, your income, make sure that it's structured correctly. Then we'll do a Zoom call and I'll go through everything visually to show you what's out there, what the rates are, what the monthly payments are. So I would advise people, instead of just focusing on rates are important, but focus on the monthly payments, focus on having a mortgage that is affordable to you, because the rate conversation can be misleading. Right now, we have, within the next year and a half, millions of people that are going to be coming off a really low rate of like 1 point X, 1.9, 2%. Because at the time they took their long fixed rate mortgage out, the rates were really low. So anything is going to be a huge increase to them because the rates are higher than they were at that time. Conversely, prior to the rates dropping, people who were on interest rates starting with a 4 or a 5, when the interest rates dropped and they went to remortgage and they saw interest rates at 2% or 1.8%, that was an amazing and could be life-changing rate reduction. So rates are important, but just make sure that you select the right fixed term and make sure that you select the right product and the right monthly payments to match your budget. When do I pay the deposit? When do you pay your deposit? So your deposit is going to be required, or proof of your deposit is required at the very beginning of the mortgage process. They will ask for a bank statement. If you're getting a gift from someone else, so like if you have a parent or someone's gifting you some money towards your deposit, you may not want to ask for the money before you need it. And lenders will understand that. But in most cases, you're going to need to provide proof of your deposit. I've done a lot of videos on what lenders want to see. One thing they don't want to see is lots of money coming from random places on your bank statement. So as you build up your deposit, make sure you put it in a high interest savings account that's producing some interest for you. The best way and the cleanest and easiest way to be able to demonstrate where those funds come from is when you get your salary paid into your account, you transfer from your account into this savings account. You're probably not going to get the best interest rates on your current account. That's why it's important to go to Money Saving Expert and find a good savings account that's going to give you a great rate of interest. But the actual deposit doesn't come out of your account until almost before you get your keys. So it will sit in the account until that point. And do keep in mind that if you have like a lifetime ISA and some other types of savings products, the money that you have in there is not paid to you. It goes directly towards the purchase. So I've had clients who have had ISAs or lifetime ISAs that they're going to use that money towards their deposit. It's not money that is then given to you. That money is used for the purchase. So just keep that in mind. What is the difference between a valuation and a survey? Great question. The difference between a valuation and a survey is this. The valuation is for the lender. So the lender, in any case, when they're doing a mortgage, they need to know how much the security property is worth. So the purchase property, they need to know the price or what they feel that it's valued at. So they'll do a valuation. In most cases during the mortgage process, when we're doing the full mortgage application, we'll order a valuation. Sometimes you have to pay for the valuation. Other times it's one of the incentives that comes with the product. But the valuation is for the lender. There's three outcomes. You could come in at value. So the purchase price aligns with what the lender thinks the property is worth. It can come in above value. They might say, well, you're purchasing it for 400,000, but we think it's worth 420,000. Great news. However, you have a problem if it comes in under value. If let's just say you're buying it for 400,000, but they value it at 380,000, that's a problem. I do have a video on that. Make sure you look it up. So there's going to be three things. So the valuation is for the lender. It's done in every instance. You may need to pay for it. It may be free. A survey is something different. A survey is for you, the buyer. You want to know more about the property that you're purchasing. You want to understand if there's some issues or there are some structural challenges that might cost you a lot of money. You want to know that in advance. That's why you would get a survey. So you'd get what's called a RICS survey. You can find RICS qualified surveyors online. Some lenders will offer the survey as part of the purchase process. You do have to pay an additional amount for it. Make sure you do your research when you're getting the survey conducted and you're selecting a company. They're all qualified professionals, but as with any qualified professionals, you will get different levels of service. So the key difference between evaluation and a survey is the valuation is a required part of the mortgage process. The lender wants to know how much the property is worth. A survey is an optional bit that the purchaser may choose to decide to get a survey done. What if my mortgage offer expires? So let me quickly explain the mortgage process. First and foremost, you speak to a broker. So you'll come to me, we'll do an affordability assessment. That will enable me to do an agreement in principle, AIP, or a decision in principle, or a mortgage in principle. This is not a mortgage offer. It's not a binding contract. In most cases, the AIP, or agreement in principle, is going to be valid for 30 days, 60 days, 90 days. It will say on the document. But that agreement in principle has not been underwritten, meaning we've entered information in the lender's website to say these are the figures. They haven't asked for payslips or bank statements. They've done a light credit search, and a lot of times it's not a full credit search, just to see if on a cursory view, if you look like you would qualify for this product. The lender then does the agreement in principle. So you now have the agreement in principle. You go out, you look for a home, you negotiate the price, you get the seller to agree a price to sell it at that you're happy to purchase it at. And then you come back to me. We put all of those property details in, because remember, an agreement in principle is against you, the individual, or the couple. It's against the person purchasing the property or people purchasing the property. So it's based on you. A mortgage offer is based on the property. So when you're getting a mortgage offer, they're going to ask for the property details, because you might find that the lender is more than happy to lend to you as an individual. However, the property that you're looking to purchase may have issues, or they may not want to lend on that. This is an important distinction. So you may have an agreement in principle. The lender may be willing to lend to you, but when you find the home, they may not want to lend on that specific property. But let's just say you go through the underwriting, they do the credit checks, we send them all of your documents, they're happy with the documents. They do what's called a full mortgage offer. The full mortgage offer will detail the interest rate, the monthly payments, everything about that mortgage. It's 8 pages. Make sure you read it thoroughly. Make sure you understand it thoroughly. Make sure you go through that mortgage offer with your mortgage broker. There's a couple of great things about a mortgage offer. It does solidify the offer from the lender. It has a end date, so they might say, well, this offer is good for the next 6 months. That's great. That protects you from any rate increases. So within that period of time, if they remove that product, or if the interest rates go up, you're protected from that because you have that mortgage offer. However, if rates go down and you're dealing with a broker like me, we will be able to put you on that lower rate with your permission. So the mortgage offer is great because you know what you're working with, and it starts the purchase process. However, it does have an expiration date. So let's just say your mortgage offer expires in 6 months. And like what happened to me today, my client called me and was like, the solicitor's telling me that the searches are taking a long time. So what happens if my mortgage offer expires? We just go back to the lender and let them know that it's taking a little bit longer. Now, in most cases, they'll extend the mortgage offer with very little need for any additional paperwork. Sometimes they'll rescore the account. This is why it's so important that during the mortgage process, you behave yourself financially. So don't go out and get credit cards or get loans or do anything that would impact your credit. Now, you do want to pay down loans or pay off credit cards, but if you've been approved for a mortgage based on a specific affordability, if you go out and get more loans and more debt, that will impact your affordability. So when you go to get that mortgage offer extended, if they do a new credit check, then it may mean that they're unable to give you the extension. And this also goes for your job. Like, it's not a good idea to change jobs during the process. It's not a good idea to do anything that is going to impact your ability to be able to repay your mortgage. But in short, if your mortgage offer expires, you can get it extended. Just make sure you reach out to your mortgage broker and they'll be able to do what is needed in order to get that extended. How do I prepare for a mortgage? I'm going to talk this through really quickly. And if you do these things, it will give you the best chance to get the best rate and the best product that you qualify for. And it's always about what you qualify for. You've heard me say it before, and I have tons of videos that cover this off. Make sure that you check your credit report at least once a year. I would advise twice a year. And we always recommend and we require, if we're doing a mortgage for you, that you go to checkmyfile.com. Download your Check My File credit report, review it, make sure that everything is as it should be. Do this before you apply for your mortgage. And you know what I'm going to say next, right? Make sure you speak to a mortgage broker at least 6 months before you think you're ready to get your mortgage. The reason this is because if you look at your credit file and you find things that aren't supposed to be there, or someone has registered something that's on that they shouldn't have registered on your credit file, it may take a couple months to get that resolved. And your credit profile, not just your credit score, but your credit profile will determine what products you qualify for. So if you have a unsatisfied CCJ, or if you have missed payments that weren't actually missed on your credit file, it may take a month or 2 months or 3 months to get that resolved. So if you speak to a mortgage broker 6 months before you think you're ready, we can go through all of the details with you. We can look at your pay structure. We can look at your bank statements. We can do all of these things to make sure that you're prepared, that when you apply, any silly things that could be cleaned up are cleaned up to get you the very best product. Speaking of tidying things up, make sure you tidy up your bank statement. So, as someone that's worked in finance for over 30 years, I used to work as a bank manager. And quite often, people would come into the branch and speak to one of my staff with a printed bank statement and point at something and say, "What's this?" As if we in the bank sit and just look through people's bank statements. The reason why I say that is on your bank statement, you might see some things that you forgot about. Quite often, we sign up for these things and it's free for 30 days or free for 14 days, but you have to cancel it. We forget to cancel it. And because we're just flush with cash and we don't review our bank statements, it could be, a $9.99 subscription that you've been paying for the last 8 months or 9 months. All of these things add up. It could be something that's on your bank statement that's going to impact your affordability. So go through your bank statement, look at your standing orders, look at your direct debits, review your insurances, review things that you're paying for. Because, for example, a lot of bank accounts have what's called packaged accounts. So it may come with mobile phone insurance or breakdown cover. So you may already be paying that. But then when you look on your direct debits, you see that you're also paying for that service through another provider. So tidy all these things up. Don't put silly transactions on your bank statement. I always tell this funny story. I had a client who came in, I was doing a mortgage for them, and they had loaned someone some money. And in the reference, they put something silly, something, is a young guy. He just put something silly. And when we were doing the mortgage and we sent that over and the lender saw that reference, they queried it. So things like that. Make sure that you are managing your bank statement well. Make sure that your direct debits that you no longer need are canceled. Make sure that you have a good grip on your finances. If at all possible, make sure that you're not using your overdraft. Stay in credit. Make sure that your salary is paid into your current account that you're going to be producing, because from a bank statement perspective, anything we see on there as far as transfers or deposits, we may need a bank statement to support that. So if you're like me, I have three bank accounts, and I have one that my salary goes into. I have another one that I use for my daily expenses. And then I have a third one that is just, I just keep money in there. Um, Quite often during the mortgage process, they're going to need to see 3 months of all three bank statements. So if you don't need the additional accounts, then just close them or combine them, or just make sure that your bank statements are tidy, easily read, and they make sense. Check your employment contract. I don't think I've ever talked to somebody and gone through their finances, asked them about their work benefits or their death in service, and they completely just know what it is. Most people don't look at their contract beyond signing it and starting their job. The reason why I say to look at your contract: are you fixed term? Are you permanent? Are you a contract worker? All of these things will impact your ability to get a mortgage. It won't prevent you, but it will mean that certain lenders might need additional things. Are you paid through an umbrella company? That's another thing. These are the things that your broker is going to need to know to match you with the very best lender. So look at your contract, understand your structure, if you're full-time, if you're part-time, if you're permanent, if you're temporary. This way you can discuss these things with your broker. Maximize your deposit. So make sure that your savings towards your property purchase is in a high interest savings account. Make sure that the funds that are in that account, it's easy to track and trace how that money was built up. So you got paid £1,000 into your current account, you transfer £200 into your savings account. It's clean, it's easy to track, and it will help you save the money quicker, and it will make it more visible. But by having a high interest savings account, it just means that your money is working for you. As I always say, speak to a mortgage broker. Don't speak to your barber or your cousin Ray Ray or your beautician or the lady doing your nails or the guy in the line in front of you at Tesco's. Speak to a mortgage broker. We are licensed professionals. We have a lot of regulation that ensures that we're going to do the best thing for you. Our job is to make sure that you get the best product over the shortest term on the best rate within the criteria that you're looking to get your mortgage. So speak to a mortgage broker. Most mortgage brokers are going to be more than happy to have a conversation with you, answer your questions, even if you're not ready to purchase now. So it's important that you speak to a mortgage broker. And it's also very important that you're honest with your mortgage broker. If you're speaking to a mortgage broker and you don't trust them enough to tell them the truth, then you shouldn't be working with them. Only work with someone that you trust. So you may need to get a referral from a friend or family member who has worked with that broker recently, not 20 years ago when they bought their first home, but someone who's worked with that broker recently. Check the reviews, ask questions, make sure that you feel comfortable before you proceed. But once you start the process, make sure that you're transparent with the broker. Because there are specialist lenders to meet every need, there's no need to be dishonest. And lenders don't want people that aren't being transparent. There's something called disclosure. A bank would rather know that you missed a payment then you say you don't have the account, and then they pick up that you have an account. All right. So just make sure that you're honest. It will also speed up the process, because one of the things about being a broker that I absolutely love is the more you do it, the better you get at it. and you get that muscle memory. And now I'm speaking to a client, and as I'm talking to them in my mind, I'm able to say, well, yep, this is good for this lender, this is good for that. And by the end of the conversation, in my mind, I probably have a list of 3, 4, 5 lenders that I know I can take them to. Then I get the documentation, I verify it, and then we just go and look at the lender's specific criteria. If we're not sure, we can speak to a business development manager. But none of this is possible if you're not honest with your broker. Even if it's something that you're not sure will make a difference, make sure you tell your broker, because if it's not going to make a difference, then they'll tell you. If it is going to make a difference, it's better for us to know in advance. My name is Anthony Lindsay, and I'd love to be your broker. If you don't need a broker, then I'm sure you know someone that does. You can scan the QR code, you can reach out to me. I do something called a mortgage affordability assessment. I do it completely for free, no pressure, no selling. And mortgage affordability assessment will let you know how much you can borrow based on your circumstances with no credit check, no pressure. I'll simply use my 30 years worth of knowledge, ask you some questions to get a guide on what your income is, what your credit profile looks like, how much you have for a deposit, and where you're looking to purchase based. That's that I can understand what the property prices are. And then I'll be able to tell you, well, look, this is the likelihood that you'll be able to borrow this amount. I'll also be able to tell you what the stamp duty might be if you have to pay stamp duty, give you a guide on what the solicitor's fees are, so you can take that information and maybe you need to go away and come back in a couple of months, or maybe you're ready now. But either way, I do a complimentary mortgage affordability assessment. Just make sure you reach out to me. And if you have any friends or family members that are looking for a mortgage, make sure you like, share, and comment on this video. And I will make sure that I continue to provide quality content, explain things in a way that you can understand. And I always welcome your feedback and your referrals.